Happy Sunday, guys. It's that time of the week where we go through the watch list. I'll tell you what I'm looking at and we can go through it together and hopefully you can get some ideas of your own. So this is what we've got going into the week. We've got euro dollar, euro yen, we've got New Zealand dollar, we've got the dollar against the NOK, and we've got the S&P 500. So let's start from the bottom and work our way up. So recently the S&P has been on a huge run. We can see very clearly here we've had a really clean movement to the upside, and we created an all-time high right here at 6,026. From there we ended up moving down, coming down to our 200 moving average, bouncing off and then retesting this level. We have now broken above. So I'm very simply just looking to enter back on this level of resistance, looking for a break, which we've had, and looking for the retest on the lower time frame, whether that's sort of the H1 or the 30-minute time frame. We'll see. However, this trade is supported by the US market or the US economics at the moment. We've got strong labor market. We've got rate cuts coming into 2025. I mean, the Fed rate cut. So on screen right here, you can see the Federal Reserve probabilities. Now, this is probabilities. It isn't set in stone, but we can see into sort of the end of 2025, start of 2026, we can see we are in an easing cycle. We can expect all of these cuts to happen. Now, cuts do benefit the S&P and the indices altogether, especially the Russell. However, I don't trade the Russell. I prefer the S&P. So I'm looking for a very simple setup here. Now, there is a secondary option here. We could enter potentially on this 200 moving average if we do see price start to come a little bit lower. So if we see a similar situation what we had here, where we had a rejection and then quite a large move to the downside, we could see a very similar thing where we see price come down, touch this level, and we enter off here rather than here. But of course, we'll have to see how the market's open. I don't trade market open. I also don't trade really straight away, on Monday morning. It's more a case of I'll wait for Monday to happen. I'll wait for the markets to open. They'll digest whatever happened over the weekend, if there is anything. Markets can settle a little bit, and then I can get a more clear idea. Because Monday we normally have some, I'm going to say irrational moves, but you know what I mean by that. It's normally moves that don't continue through the week. So it's not uncommon to see a counter trend move on Monday and then a continuation through the week. Now, just to slightly back this trade up, we do also have the S&P here on the Edge Finder as a bullish read, and it's currently got a score of 7, which is good. It's quite high. It's a good confirmation here. We've got COT data is long, so we know that the big boys are also buying this market. We've got a majority of 53.23% long. We have got retail traders majority short. I don't know why, don't ask me, but we fade them always because they lose. We've got a bullish seasonality, and of course we've got the Christmas run. So if you guys don't know what the Christmas run is, I mean, it's a bit of a fabled thing, I guess you could say. The common way of explaining the Christmas run is people go out shopping more for Christmas. The consumer spending increases, thus pushing up profits of companies, helping the S&P. Although, to be honest, it's, I wouldn't specifically trade it or try and trade it, but the end of the year for the indices, especially the S&P, typically is very good. So we can try and trade the seasonality aspect of this as well. Now, next up, we've got the USD NOK. So what I'm looking for really is we've got this NOK. Now, you may have remembered me speaking about the NOK not too long ago, probably a couple of weeks, but I kind of scrapped that trade idea as the US dollar strength came in. But I'm starting to look at it again now. So if we look at the rationale, you can see this is long NOK against a basket of euro or dollar. It doesn't have to be the dollar. It could even be something else. Obviously, you need to do your own research. But we can see the Norwegian krone or the NOK benefits from strong fundamentals, a hawkish Norges Bank stance and undervaluation, global risk appetite, and Norges Bank's involvement in FX markets could drive additional NOK strength. Now, actually, just a side note, I get quite a lot of comments saying, what is this? Where do I get this information from? And it's private research. It's only available to our members. So I'm actually happy to give you access this week. You can see the password here. I'm not going to put this in the description. You're going to have to put the effort in and type it in yourself if you do want it. But every week you can see we send out this link. It's updated research. And it's basically a roadmap into what's going on in the markets, what can we expect to happen, what are the best currencies to look at, etc., etc. We've got full breakdowns on, the euro here. We've got US equities. We've got the agriculture, emerging markets, US dollar, so on and so on. I also attached some data points as well for any of our members that don't have access to softwares like that. And we do have trade ideas that come in, but these aren't signals. It's just, again, more of a roadmap into the markets. So there you go. We can expect something to happen with the NOK. I am looking more towards into 2025. Now, the reason I'm looking specifically at the dollar is if we look here on the daily time frame with a Bollinger Band of 200, we can see this market is very overextended. Now, if we look at what happened previously, we broke out here. We had a really large move to the downside. We broke out again, or we came to the top. We had another push to the downside. We did have almost a similar thing here and here. So we can expect another move to the downside on this dollar knock. So I'm looking for a bit of a, you can almost call it like pattern recognition, if you will. Looking for basically the same thing that's happened 4 times already and just looking for it again. So there's nothing super crazy in terms of the technicals here. But yeah, it seems like a solid trade in my opinion. It's just a case of, getting it right. Because if we look at the dollar, we've had a huge move to the upside. We've just sort of rejected this 107 level. So selling the dollar potentially isn't a bad idea. But we're going to move on to that slightly in a moment, actually, as I move on to some different pairs. So this trade here is mainly looking to benefit off the dollar strength. Now, this trade may be scrapped. The reason I'll move on to in a second. But yeah, if we look at this market overall, look at the move we've had to the downside. We've been making pretty good money on New Zealand dollar to the downside, selling it, obviously. So we're basically just looking to capitalize on the downtrend, follow the momentum, and see how this goes. You can see in a technical aspect here, we've got this previous level acted as support twice, broke, retested, failed to break above. And now we're back retesting this level again with an RSI that's oversold. We've got the 200 moving average coming down that again could act as a nice little dynamic resistance for price. Now, the issue is I don't have really too many factors against the New Zealand dollar. I'm actually relatively neutral on the New Zealand dollar. I do think it's very undervalued in terms of the New Zealand dollar, US dollar market. However, if we look at the US dollar, we don't really have any negatives in terms of data. So what we have is a relatively strong labor market, or a very strong labor market. We've just come out of Thanksgiving, which obviously the problem there was we didn't have any trades in the US. So there's a lack of volatility or a lack of liquidity coming into the market at this time. And we still are in this Trump trade. Now, what I also just want to side note is if we look at the US dollar, so the day of the election, or the day before the election, sorry, up until the previous peak, we've seen a rise of 3.91. Now, if we go back to when Trump was previously in, during the 2016 election, which was all the way back here, we saw a very similar setup. We saw the rise the day before. We saw the push to the upside. Now, this was a 5% rise, followed by a negative 14.25% move to the downside. So I'm just very, very cautious of, is this going to happen again? If we started this move to the downside now, I don't want to be stuck a buyer if we're going to see a 10% plus drop. However, the reason I'm not too worried right now is because the data doesn't tell me that. I'm not seeing any reasons really to be super bearish on the dollar. The only thing is the rate cuts that I mentioned earlier. So for now, I'm staying a buyer in the dollar until something changes. So if we look, like I said, if we're following the trend, we stay a buyer in the dollar, this market looks like a great opportunity to go in for a short position. So next up, we have got the euro yen. Now, for a while, I was quite bullish on the yen pairs, so dollar yen, pound yen, euro yen, etc., etc. And I was really projecting a full recovery back up to sort of the previous highs, pre-intervention levels. However, I've revised this idea now. And it might be a little bit late, I know, but I have changed my standpoint. And the reason is because we're looking at a potential Bank of Japan hike. So if we look here on the bank probabilities, we've got a 58% probability of a hike and a 42% probability of a hike. So we've got basically a 100% chance that the Bank of Japan is going to hike in December. Now, what we also have is the MOF basically needing to intervene. Now, the Ministry of Finance, which is the MOF, have basically said they need to intervene. They know they do, because the recovery in the yen that we did see is flatlined. So we see, we ranged for quite some time. Then we started to decline again. And actually, recently, we started to pick up. I think as we've got more buyers in this market, as it's become a bit more publicly available that they're going to intervene, and there's rate hikes coming for Bank of Japan, people are starting to buy this market. So I am actually looking for a slightly higher yen, which is a really big change in tone for me. So I'm looking really for a 50% retracement from the high to the low. So we can see here this sort of 50% within the golden zone level. And then a sort of continuation to the downside. In terms of take profits, I don't really have one set in stone. It's more sort of within this support level that we see. From there, I'm happy to take profits and we can maybe re-look for new opportunities from there. But that's fine for a 2.5% gain, no issue. Now, another reason is because of the euro. Now, the euro isn't in a good place, and this isn't a secret. We don't have really any supportive factors. They're cutting rates. The Eurozone data's been weak. There's now word of Germany leaving the EU. I need to double check that. Don't quote me, but I saw a news article. I need to, again, go and double check that. But yeah, there's nothing really within the Eurozone to make me a buyer. So at the moment, I remain bearish on euro, as I have been for the past 2.5 months, roughly. The yen seems like it has some potential to start gaining some strength, so I'm happy to be a seller in this market. Now, euro dollar, my favorite pair. If we look at what's going on with the euro, I mean, I just touched on the euro, so I'm not going to go into that again. And again, we've already spoken about the dollar, so I'm not going to bore you by repeating myself for just the same assets but a different market. But if we look on what's going on, really, let's actually go onto our Bollinger Bands here. So if we look, we've broken below. Now, I showed you already on the dollar NOK, but we can expect a potential pullback here. So we've broken below. Here we touch the bottom, here we touch the top, and you can see this pattern. We bounce in between these levels, typically. Now, there are situations, like you can probably see to the left over here, where we have these situations where there's something in the markets or something economically that traders or investors do not like. So we touch the bottom, we consolidate or have a slight raise, we touch the bottom, consolidate or have a slight rise, touch the bottom, same again, same again, same again, same again. And then eventually, obviously, when data changes, we have the recovery. Now, I am just being super cautious right here because it's not just the Bollinger Band. We also have this level of support. So I'm just a little bit skeptical in terms of the technicals. The fundamentals, I remain very, very bearish. I am continuing to go in for sells, and I'll continue to execute sells until I see the data change. However, you know, I'm going to trade what I see, and if I'm wrong, fine. If I'm not, perfect. Don't care. And obviously, I'm saying that from a risk management point of view. But if we look here, we've got a very similar setup that we saw on New Zealand dollar. We've got this low here turned into a level of resistance on the previous previous highs, and we're still using this resistance. We already just rejected this actually on Friday. So I'm looking really for a continuation to the downside. We still have a market gap here that's not, well, actually on this market has been filled. On my broker it's not. So it's a little bit, you know, broker dependent. So I wouldn't trade into that gap specifically on euro dollar. But yeah, this seems like a good trade. Just take it down to the previous low here. Now what we also have, and this is just a cool little confirmation. We do have Refinitiv, which is an institution. So we can see that, you know, this is on the bank trade section. We can see they are short euro dollar. Now their position is actually almost at stop loss, but the fact that they took this position is a nice confirmation. I don't follow these trades one-to-one, but you know, again, if these big ivory tower people have seen this market as a sell, it's just that flat line confirmation. It's just a nice overall or a broad thing to say, okay, well, maybe I should look to sell and look for my own opportunities in this market. So that's about it for this week. So what I want you to take away really is just, I remain bearish on the euro, remain bullish on the dollar. That's the main things. I'm starting to switch bullish on the yen as well. However, again, these markets are very, very extended. So maybe just wait and relax and just wait to see how these markets react at the current levels they're at. And if you're confident in your strategy and your analysis like I am, then fine, go in for your positions. But obviously, if you're just trying to listen to what I say and take it away, I would be more patient in the markets at the moment and just, again, wait for those reactions, see how the markets develop this week. We do also have a lot of news, actually. So this news for the US dollar will be very important. It's all labor market related, which again will influence what the Fed decide to do in December regarding the rate cuts. At the moment, I'm still on the side that they're going to hold. But there is potential they'll cut 25, especially if our labor market data starts coming in weaker. So we've got JOLTS, job openings, we have got unemployment, we've got we've got average hourly earnings. Again, that's the labor market or wage growth. We have also got non-farm payrolls and another unemployment rate. So it's going to be a big, big week for the dollar. And if those numbers disappoint investors. We are going to see a very bearish dollar as we start seeing, obviously, the bad news digest, along with the higher potential of a rate cut by the Fed. So it's not something I'd want to be caught in. So again, manage your risk, manage your US dollar exposure, and trade sensibly. And that's it from me. So guys, have a good week. I'll see you later. Join our Discord, by the way, link in the description, and like and subscribe. It helps me out a lot.